Welcome to the GrayHawk DJC podcast. In today's podcast, we talk with Todd Hartgrove, a residential mortgage loan originator at Willowbend Mortgage in Dallas, Texas. We hope you enjoy the podcast. Hey Todd, how you doing?
Doing great. How you doing, David?
Pretty good. Thank you for doing this.
You bet.
I know we haven't seen each other in a while, but welcome to the show.
Thank you very much.
Right.
Appreciate it.
How's your life? How's everything going? Yeah.
Life's going great.
Yeah?
Life's going great. Yeah.
Anything interesting happening with you? Or?
No, not really. I think business has been pretty great the last year and a half.
Mm-hmm.
It's maybe slowing down a little bit, I think, finally, but it's been a really good start.
Okay.
Yeah.
Awesome. So we usually start the show by having the guests tell us about themselves, give us your background, where you're from, let the audience kind of get to know who we are.
Okay.
So go ahead.
Okay.
Yeah.
Well, my name's Todd Hartgrove, and I'm from Dallas. Grew up here.
Mm-hmm.
Went to high school at Jesuit, and then went to University of Alabama.
Okay, that's too bad.
And got a finance degree from Alabama. Moved back to Dallas and married my wife, Kira.
Okay.
We have 2 daughters. We live in East Dallas, Lakewood, and that's kind of how I got to where I am.
So were you doing anything between college and coming back to Dallas, or?
I lived in Atlanta for about 8 years.
Okay.
Actually managed an apartment complex that I bought,
Okay.
and so did that for about 8 years. Also worked for a bank in Dallas before I moved to Atlanta.
Okay.
For 4 years.
You bought an apartment complex?
Bought an apartment complex. Yep.
Wait, okay. Let's get into this, because how'd you get that happening?
It's kind of a long story about how we got started, but basically just put some money together and had been investing in some properties here in Dallas with my cousin and some other people I knew that were in that business.
Right.
Made some money and learned a lot about it while investing with them. And then moved to Atlanta and decided to do it myself.
What made you go to Atlanta and invest in that particular
having
property?
gone to Alabama, most of my friends from college were there.
Right.
And so I just was looking to maybe live somewhere else for a while. And it's a really nice town. It's very much like Dallas, but has maybe more trees and some hills. It's a pretty place, and had a lot of friends there.
Okay.
Yeah.
So when you looked at that apartment, what made you want to get that particular property?
Well, I was looking for a place where I could buy it and rent it. We needed some renovations.
Right.
Renovate it, raise the rents, hopefully make some profit on it.
Did you know what you were doing at the time, or is this something you just kind of learned as you went?
A little bit. I mean, I think I knew enough. Like I said, I had spent some time when I was investing with the people I was investing with, walking the properties, kind of going over the numbers, looking at what they were doing. So I had a pretty good sense of what I wanted to do.
Okay. And were you ever thinking about expanding that type of business, or?
I was, yeah. That was my initial intention, was to continue on doing it. And then, then back in 2008, the recession started hitting, and rent started going down, and became a more difficult time to make money. And so I decided to sell the property while I could, and get out when I could, and then got married, and it became more and more difficult to kind of get back into it once I started having children.
Sure. So you come back to Dallas, you got married. So where are you there? Where are you now in your job and life right there?
Oh, so moved back to Dallas. Actually worked for a real estate company for very briefly, and then got hooked up with my company now. And got introduced to somebody here that kind of became my mentor doing what I'm doing. I worked for him for a couple of years on his team.
Okay.
Kind of learning the business, learning how to do it right. And once I was kind of ready to do it on my own, I started my own team.
Okay. So tell us what you do right now, what your title is, and where you're working,
Okay. I'm a residential mortgage loan originator. That's my official title.
It's a mouthful.
Yep. So what I do is I basically help people get loans for houses.
Okay.
So they're either buying a home or if they want to refinance a house. That's basically what I'm doing. So I'm helping them get their financing lined up.
Okay.
And so that means people come to me, they apply, we lock in the interest rate, they start to send me documents, order appraisals, like all the things it takes to get from point A to point B, get a loan approved. So
when you first got hired, do they just throw you into the job, or how did you learn everything, or what's that process like? Yeah, so I first got hired. I was essentially an assistant to a guy who does a lot of loans. So he was kind of teaching me the business as we went on. So he was just showing me, here's what we're going to do now. And one of the best things about that was seeing what can go wrong on a loan and how to fix those problems. And how to basically get around obstacles that we run into sometimes. What are some of the obstacles then, I guess, you guys run into? Oh, I mean, people not making enough money for a house they want to buy would be one. There's ways to kind of not get around it, but you can pay off other debt that you might have and pay off a credit card or a car, that kind of thing. Are they not aware of their situation, you think? Or is this something that it's funny that someone would not know that they can't afford something. So
you'd be surprised. Yeah.
Okay.
I mean, so I have a lot of clients that, want to buy, $1 million house when they probably should be buying a $400,000 house.
Okay.
But that's what they want. And so we try to make it happen. I usually try to advise them that here's what the payment's going to be. It's going to be a big payment. It's going to be most of your take-home income.
Right.
And try to encourage them maybe not to buy a house. But it's not really our position to tell them not to buy a house. It's just, here's what I can get you approved for. But I do try to let them know and give them a pretty good idea of what they're getting into.
Right. So how long were you assistant for then?
About 2 years. Yeah.
Okay. And then what happens after that today?
So then I'm no longer an assistant. So I'm basically just doing my own loans.
Okay.
And so, the main difference is when I'm an assistant, I'm getting a salary. Once you're not an assistant, it's a 100% commission job. So I'm basically just, eat what you kill kind of a deal where you're just, if you don't do any loans that month, you don't get paid.
Wow. So there's no base salary at all?
Not for me.
Wow. Okay. So how are you getting customers and what are you doing? Are you...
So it's a lot of networking, calling real estate agents, going to, meetings, clubs, going to breakfast, places where, people are gathering. There's a realtor breakfast they have, and just friends, family, just people I know.
Okay.
It's kind of where you start. And then it starts to build. It's kind of like a snowball. It gets bigger and bigger, and now people just call you without, just people around me start calling you eventually. But it's a lot of just word of mouth, calling real estate agents, letting them know who you are, getting together with them, taking them to lunch or coffee.
Okay.
Letting them know who you are, and kind of going from there.
Were you preparing yourself for this, like maybe half a year before this? Or? So
while I was on the team, I was able to go to networking breakfast, call real estate. I would have time to call agents and kind of build my network while I was on the team.
Okay.
So that was one of the great things about working for the guy I was working for. He was really great at letting me kind of build my business as I was working on his team.
Right.
So I was able to do loans on my own through his group, and actually start to build my network that way.
I see. Do you remember your first actual customer?
Yeah, it was a friend of mine. Yeah.
Okay.
Yeah.
How'd you feel, or how'd that go?
It went great. I mean, I didn't know exactly what I was doing for a lot of it, but that was back when rates were really low. The first time rates got really low back in 2012.
Okay.
And so it was really easy to, be at a dinner party with friends and talking about what you do, and rates are low. Oh, how low are they? And then let them know that you could actually save a lot of money. And that's kind of how it started. It was one of my good friends. We were out one night and we started talking about where rates were, and kind of went from there.
Was it nerve-wracking to know that you were helping a friend? Is that kind of different than helping a stranger, I guess?
I don't know that it is. I think because I was helping a friend, and they were definitely going to save money. I mean, it wasn't like I was convincing somebody to do something they shouldn't do.
Right.
I mean, it made a lot of sense for them to refinance, and our rate was really great compared to everyone else's too. So it made a lot of sense for him to do it. And so I think that's part of the job, is helping people, educating them, and also helping them save money. And I like that aspect of the job.
Right. How long did it take, you think, before you got fully just comfortable? This is like something you could just do naturally.
I would say just understanding the business by at least 6 to 8 months. There's a lot to it. As far as having my phone ring enough to where I could do it without being paid a salary. It took about 2 years.
Oh, wow. Okay.
For me, that's why I waited 2 years, because I needed to have enough business coming in where I could say, no more salary. I'm ready to go, on my own and feel comfortable that I could, get enough business and also feed a family, because my wife was not working. We just had 2 young children, and so it was, kind of like jumping off a cliff without a parachute, making sure that your parachute's going to open, But I felt pretty confident that I was okay to go.
So it's almost like starting a business within a company, right?
It is, yeah.
And so, but I mean, they support you kind of, but they're not paying you necessarily to do this, right?
That's right. And so it's like a support. Like it's like you're owning your business, but it's you have a support staff. You've got a processor and a team of underwriters and a lock desk that's getting your rates locked in and all that. But yeah, I mean, if I don't do any business for 6 months, I don't get paid for 6 months.
Oh my gosh! Yeah. Wow,
that hasn't happened. I don't know if it ever happened actually, but it has happened where I've been a month without getting paid.
So how did that feel when you realized that, like, that you're on your own? Now you have to make a commission.
Well, it felt pretty good actually, because I had a pretty good volume of business at the time, and so I was making a lot more money than I had been when I was on salary. So right away, it was working out pretty well. I probably could have done it 2 or 3 months earlier, just because I was trying to support my family and wanted to make sure. I waited a little bit longer, but yeah, it felt great actually.
Right, and it doesn't hurt that you're in Dallas. Right.
No, it definitely helps me because I have a lot of contacts here.
What do you see in the Dallas market? It's been crazy, busy. Just tell us what you're thinking.
Yeah, I mean, the real estate market has been crazy. The last, really since I would say February, the last 10 months, it's been really pretty insane as far as people making offers on homes, 10 offers on every listing, and all the offers are above the asking price.
Is it tens of thousands above asking price? Because I'm hearing
hundreds. I've seen hundreds of thousands of dollars above the asking price. Yeah.
Seriously.
Mm-hmm. Yeah.
So what's driving all that, you think?
Demand. Just a lot of demand, not a lot of supply. Okay. That's the main issue. Is there's not a ton of homes for sale, and there's a lot of people moving to the Metroplex. DFW is, a lot of companies are moving here, and so you have a lot of people moving here wanting to buy homes, and not a lot of people selling their houses.
Right.
So you have a lot of people paying way above the asking price. It's still happening. It's just instead of getting 10 offers the first couple of days, they're getting 5, and so it's becoming more normal. But it's still very active. I think as far as what the future is, I think it may slow down a little bit through Christmas, but then I think a lot of people expect, 2022 to start off just like we've been all the last 6 months, which is pretty chaotic.
Right. What kind of marketing are you doing right now to promote your business, or just people just finding you since it's so busy?
I just call realtors that I've worked with, because I've worked with a lot of realtors by this point. So I'm just making phone calls to agents that I work with, because some realtors just consistently refer their clients to me, and so I'll talk to them a lot, and then make sure to call agents that I worked with in the past, check in with them, take them to lunch, or meet them for coffee, and remind them that I'm here.
Right.
And
right.
And as far as marketing, I don't do a lot of marketing. We don't get a ton of business from marketing. People don't typically call a mortgage lender because they see an advertisement.
Okay.
Some people do. Some people do like to just go online and look at Quicken. But for the most part, most people use who their agents tell them to use, or maybe from who a family or friend told them to use. That's where most of my business comes from.
I see. Okay.
And so I do check in with previous clients, and check in 6 months later, a year later, give them a call and say, hey, thank them for the business and see if they have anybody that they know, somebody buying a house, love to work with them. And then same with realtors. Yeah.
Okay. If someone's trying to get into the industry, become a mortgage loan officer, what kind of tips would you have for them, I guess?
It's a good question. I think it helps to have a reasonably good financial background. Having a degree in finance definitely helps. There's a lot of numbers involved, and understanding them helps for sure.
Okay.
As far as what they would need, I think really what you'd want to do is find someone who would be willing to help put you on their team. I think it's almost impossible just to start off and become a loan officer without having that experience.
Right. Are you mentoring anyone right now yourself? Or?
I'm not.
Okay.
No, I'm not. And I haven't really, actually.
Okay.
So it's something I've thought about doing and hiring a team.
Right.
I do have one loan officer assistant. She is licensed, but she is not really wanting to become a producer and actually go on her. I think she prefers to stay as an assistant. But I have considered hiring a team, and because basically you're hiring somebody, then they kind of stay on your team for a while, and they learn how to produce their own business, and so I have considered doing that too. I just haven't done it yet.
Okay, so the biggest thing is try to find someone that can help you mentor you through the process, right?
I think you need to, yeah, and that's also nice because you get a salary that way. You're not just starting off. You learn the business, and you get paid. You get paid to learn the business,
right?
And so it works out for both people, because the person who needs your help, they have so much business, they need help on it. Right. Someone to do all this stuff that they need to do, so they can actually go out there and keep making phone calls and bring the business in. So it helps both people. The mentor and the mentee both benefit quite a bit from that situation.
Right. All right, so let's get into someone who wants to get a house, right?
Okay.
So in the city of Dallas, tell us what you're seeing and what your advice would be for someone who's coming to Dallas and trying to buy a home for the first time, I guess.
Okay. Take a little water break here.
Yep.
Well, I would say be prepared to, pay at least $400,000 for a house. I think it's hard to find a house for less than $400,000 right now, just in North Dallas at least.
Okay.
I would say, really, the minimum down payment required is at least 3%, 3.5% if you want an FHA loan. But I would say 3% or 5%, that range would be the down payment.
Okay.
Additionally, you're also going to need money for your prepaid taxes and escrow. So, on a $400,000 house, you're probably going to need $25,000 maybe.
Okay.
I think it's going to be hard to buy a house in Dallas if you have less than, say, $20,000 cash.
Okay. But that means you still have to pay for insurance though, right? For the loan?
Well, you have to pay mortgage insurance. Yeah,
right.
Like you put that much down, so it will make your payment higher. It's much better if you can do a 20% down.
Okay.
But a lot of people can't afford to do that right now because houses have gone up in value so much. So I have a lot of first-time home buyers. Some of the agents I work with, that's just who their clients tend to be, and a lot of them are putting on 5% because it's hard to put down 20% on a $500,000 house.
Right.
If you're buying your first house. People that are selling homes have made a lot of money on their homes lately, so they can put down 20% on a new house. But a first-time home buyer, it's difficult. That's one of the main hurdles for people is the down payment.
Okay.
A lot of people I'm seeing right now are getting gifts from parents. It's really common because parents can kind of step in, or family members can step in, and it has to be a gift. It can't really be a loan, but we see a lot of gifts from parents right now.
So how do they tell the difference between a loan and a gift, right?
Well, that's a good question. So we actually have to have them sign a letter saying it's a gift and not a
Really?
loan. Yes. Yep. Because you can't really have two loans on a house. If we're doing a mortgage, you can't borrow money for your down payment.
Okay.
And so the parent has to sign a letter saying this is a gift, and that they're not expecting you to be paid back.
Are they taxed on that gift?
They're not. That letter's not reported to the IRS.
Okay.
So it doesn't actually affect any estate planning at all. It's just a letter for our file.
Okay. So make sure they have a good down payment. Anything else that you run into, you see people have trouble with?
I do see people who have been out and bought a new car right before they want to buy a house, and it affects how much they qualify for.
Right.
Because really, what caused you to get approved for a house is your income. Your monthly income. Then there's a ratio between your income and your current debt. So whatever monthly debt you have. And so if you have a lot of monthly debt, car payments, student loans, credit card balances, it can become difficult to qualify for a house.
Okay.
And there's a ratio that we have to use, and if it's too high, it doesn't work.
I see. And then what other factors go into this?
Credit score is really important. And I would say that's one thing I would advise people too, is to make sure your credit's good, because it will really affect how much you'll pay every month.
Okay.
Because your interest rate you'll get from us is dependent on what your credit score is.
Okay.
And so if you have a 740 credit score or higher, you'll get the best rate out there. If you have a 680, the rate's going to be a lot higher.
Okay.
It's higher for the rate. It's also higher for your mortgage insurance. If you're putting down less than 20%, the mortgage insurance can also be a lot higher if you have a bad credit score. So I would say that's something people should keep an eye on for sure, is their credit score, because it can really affect what kind of loan you can get and how much your payment will be, your monthly payment will be.
Okay. So they come to you after they've already bid on a house, got the house, right? Or
Typically before, because most people selling homes won't accept an offer without an approval letter.
Okay.
And so typically what will happen is one of my clients will come to an agent and say, I want to buy a house. That agent will say, well, you need to be pre-approved first.
Okay.
And so they'll say, call Todd Hartgrove. He can help you with an approval letter. And then that's when they'll call me.
Okay.
I'll have them apply. And then once they've applied, we'll run their credit, look at their income. They'll upload some documents like pay stubs, bank statements, some of the basic underwriting documents that we have to get. And then we kind of figure out what we can get them approved for, and then kind of see what the rate looks like. And then we'll look at different loan options if they want to do 30 or fixed or 15 or whatever the case may be. But and then once we figure that out, we'll send them an approval letter. And so then they can take that approval letter and they use that with their offer.
Okay.
Yeah, because it's right now especially, it's very difficult to get a house under contract if you haven't been pre-approved, because they're going to get 10 other offers from people that are either paying cash or they've been pre-approved for sure. Right. So no one's really taking offers right now without an approval letter.
And you're finding it hard for people to actually get their offer verified,
accepted.
Right? Accepted, yeah.
I think in the last month it's become easier, but yes, this summer especially. I mean, I had a lot of very, very frustrated clients who are making offers on houses, 6 or 7 houses, in a month, and we're getting any of them, and it's frustrating for them. And it's an unusual market, and it may not be the best market for some people. If you're a first-time home buyer, it's tough. It's very competitive, and a lot of people say, I'm just going to wait it out.
Right.
And so some of them are coming back now, because I think now that's slowed down some.
Okay. So with all this activity, are people also refinancing their homes? Is that something that's going on?
Yeah, I mean, that's been going on for the last year and a half, because rates were so low, especially in 2020, and then even earlier in 2021. Rates bottomed out the lowest they've ever been. A 30-year fix was down to 2.5.
Okay.
And so we had almost every client I've ever worked with refinance the last year and a half. And then also people will also, as values go up, as people, like you said, people got frustrated, so they decided maybe to renovate their house. And so a lot of people did what's called a cash out refinance, where you can take up to 80% of the equity in your house and get cash back. And so, for example, I had a client who bought a $300,000 house with a $240,000 loan, 4 years ago. Well, that house is worth $550,000 now, and so we had an appraisal done, and it appraised for $420, I think, and appraised for $550, but we did a loan for about $420, and so they took out $150,000 cash and did some renovations on their house.
So if someone wants to do that, cash out refi, what kind of tips do you have for them, I guess?
That's also, you also would definitely want to have a good credit score. But yeah, really, it would have to have the appraisal would have to be good. The value of their home would have to be high. So if they've just bought the house, they put 10% down, you can't do it because you can only take up 80% out.
Right.
And so if you have a brand new loan that you put down 10%, it's difficult. But if you've had your house for a while and it's appreciated and your mortgage has been paid down, then there's a good chance you can borrow a pretty good chunk of money.
Okay. Yeah. What do you see people borrowing the money for typically?
A lot of things. I had a client today tell me they wanted to borrow some money for their business.
Okay.
For basically use it as a line of credit, but they're going to take a big chunk of money out. Instead of doing a home equity line of credit, they're going to do a cash out refi.
Right.
Because they can actually lower their rate. And
so what is the difference between the cash out refi and the home equity loan line of credit?
That's a good question. Yeah. So a cash out refinance is something we can do. That's basically it's a one loan. It replaces your current loan.
Okay.
And so it changes that loan to a new larger loan, and you get cash for the difference.
Okay.
So if it's a $240,000 loan now, and you make it a $300,000 loan, you're taking $60,000 cash out.
Okay.
And that loan is fixed. The rate doesn't change. So they're getting a rate at 3.25, and that rate will be say the same for 20 years.
Okay.
A Heloc, or home equity line of credit, is what that stands for. It keeps your current loan in place.
Okay.
And then it's essentially like a credit card line of credit. So you can borrow up to 100, whatever the number is, and you can kind of ebb and flow larger and smaller on the loan amount. The problem, though, is that there's pros and cons for both, but the rates are adjustable.
For the Heloc?
For the Heloc.
Okay.
And so that rate can go up, and it can go up to 18%. It probably won't, but it could.
What affects that rate adjusting, I guess?
LIBOR or just the Wall Street Journal Prime Index, essentially, whatever they're tied to.
Okay.
And as interest rates increase, that rate will increase.
I see.
And so it could go to 18%. I don't think that will happen anytime soon, but it's not unusual for them to be above 6.5%, 7%.
Oh wow, that's a lot.
So it can be pretty high.
Yeah.
I think most of 2019 it was above 5.5%, and so a lot of times the cash out refinance makes more sense because you can just get a locked in low rate.
Right.
But it depends on how low your rate is on your current mortgage and how large the Heloc would be, and so there's a lot of factors that you weigh into it.
Do you typically get more cash from a Heloc? Is that why people do
it's
that?
It's 80% either way. Texas has a strict law that you can only take up to 80% of the values no matter what. So you can take up the same amount of cash. It's just whether or not you're going to have a floating rate or if you're going to have it fixed. Okay. And the closing costs are higher with a cash out refi than a Heloc. Heloc, the closing costs are pretty minimal.
Okay.
With a cash out refinance, it's higher than actual refinance would be.
So if someone comes and says either they're buying a new home or they're taking out money from their equity, do you try to steer them in the not making a wrong decision, I guess? Or do you see a lot of people come in just with some absurd, visions of what they want to do with this money? Or
I have had somebody come in and say they want to add a second floor to their house and do all these renovations. It's going to cost them $120,000, and I'm telling them there's no way you're going to do all that for $120,000. And they haven't talked to a builder yet. They're just in their mind.
Right.
That's what it's going to cost.
Right.
And so I've told them, look, before we get too far down the road here, you really need to talk to a builder and talk to somebody and get a quote, get an estimate, because I don't think that's going to be realistic at all.
Right.
Especially right now, building costs are super high.
Yep.
And so they just had no idea what they were getting into, I think.
Okay.
And so I have seen that. I've had somebody do a cash out refinance to buy a boat. You can use money for whatever you want.
Right. They don't care what the money's for. Right.
Nobody cares.
Okay.
It's for you. So. People, probably the most common thing is to pay off credit cards.
Okay.
I do that a lot. I've had several clients pay off $100,000 in credit cards.
Oh, wow. Okay.
Yeah. I don't know how they sleep at night before that. I don't know. It's tough, but some people's just lives get expensive, and they credit cards get a little high, and there's a good way to fix that problem is with a cash out refinance. It's just you don't want to get in the habit of having to do it over and over again, because I've seen that too.
Okay.
Multiple cash out refinances to pay off credit card debts.
Now, it is good to do that if you're, I guess that's the way investors do that, to get other homes, right? To get multiple homes.
Yeah.
Keep doing that.
Yeah, that for sure. I mean, I've seen people do cash out refinance on their primary just to pay cash on an investment property, or even just use it for down payment because the rate would be better than maybe as an investment property.
Right.
And so there's all kinds of uses for it, and there's some pretty smart ways to use that money. I had people this summer when rates were actually in 2020 when the cash out refinance rate was 2.75. I had financial planner I work with a lot was telling his clients to do a $500,000 cash out and invest it in the markets because the rate was so low that it would be easier to be very easy for him to beat that long term investing it in S&P 500 index fund or something. It will do better than 2.75%.
Do you agree with that? Because I've always heard
do agree with that. Yeah.
Okay, all right. Because I've always heard don't use debt to invest in stocks.
Well, you don't. I mean, especially for credit cards. You never want to have a credit card bill and also be buying stocks at the same time because you're never going to beat 18%. But when your rate is locked at 2.75, and that's all that you have to beat is 2.75, historically the S&P 500 index beats that by a lot.
Okay.
And so that was kind of his point was we could just put this in S&P 500 index fund for next 10 years. Right. You're going to come out way ahead. Right. And so it's not like we're going to try to beat the market day to day. Just invest it right here and
just let it just hold.
Chances are you're going to come out way ahead after 30 years or 10 years or whatever the number is.
Right.
And I do agree with that.
Okay.
My interest rate on my mortgage is 2.5%. And so this is the first time I've ever not paid extra on my mortgage because I'm giving it to my guy at Merrill Lynch because he said, just give it to me. We can beat that too. So it's kind of the same thing. It's just, it feels weird not to pay extra on my mortgage because I'm used to just paying it down and wanting it to just be paid off completely. But right now, after talking with my financial advisor, we're actually investing that money instead.
Right. Do you think it's a good time for someone to invest in homes in Dallas right now with the prices so high?
That's a good question. I mean, because I've thought about the same thing, maybe buying an investment property myself, and I think it might be still because rental rates are so high, and there's definitely a housing shortage in Dallas. So there's a supply issue with people buying homes, but also with apartments and rentals. And so to rent a house in central Dallas, or even in the suburbs, the numbers are really high.
Right.
And so you can make the numbers work. If you're putting down 20, because it does require you 20% down on an investment property.
Right.
And so it's a bigger investment, but you'll still see a return with rates being pretty low. I think with rental rates as high as they are, and so I think there's a pretty good chance it still makes sense. Yeah.
But it's hard to find the house, I guess.
It is.
Yeah. That's the big problem. Okay. What's your typical day like then? So you come in the office, and how's your day going? Yeah.
It really depends. So, I mean, a lot of times I come in and someone's applied overnight, so I'm taking a look at someone's application.
Okay.
And then, usually have at least 10 loans going at the same time. So I've got all different stages of the process. And I have an assistant helping me with this, but we've got loans coming out of underwriting and loans going in underwriting. And, we need a few more documents here, or we need to order an appraisal there. And so it's just kind of keeping track of that pipeline.
Okay.
Because right now it's like 10, it's been a lot more than that the last year and a half because business was so crazy. But it's kind of slowed down a little bit to where even 10's a lot. But just maintaining that, and then when I'm not working on the actual pipeline, I'm calling real estate agents and setting up lunches and breakfast and making sure that they don't forget me.
Okay.
Yeah.
Awesome. Well, Todd, this has been pretty good. I mean, you gave us a lot of good information.
Okay.
Do you have anything to finalize with? I guess some advice, tips, anything for people.
Let's see. I would just say if you're in the middle of a mortgage process, don't buy a car without talking to your lender first, because I've had that happen, and I've had it blow up a loan before, where they had to, you had to pay it off essentially because they couldn't get approved for the house.
Right.
And we had approved them, and we told them don't buy anything, and they, I guess, didn't listen. And it can definitely affect whether you get approved for a house, because we have to run a last minute credit check to make sure that no new debt has been added. And so that's one tip I think most lenders would agree with is, don't buy a big purchase. Don't have a big purchase like a car. While you're trying to get approved for, during that process, because it can change what you can get approved for.
Okay. Well, I think we'll end with that.
Okay.
Thank you so much. This was great.
Yeah.
And we had a great time. So,
great. Thank you. Thank you, David.
Thank you very much, Todd.
Yep. Thank you.